The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN Thursday morning, just after 9 a.m. Eastern Time. Thanks so much for tuning in, starting your trading day off. And boy, we got some downside action right now. You are looking at a move, folks. Since about 3 a.m. Eastern Time, we were pushing 39.90 in the S&Ps, and we just gave up 75 S&P points. It's been a one-way trip. You see the acceleration market right now, right near the lows. You get the S&Ps off 52 points. NASDAQ 100. You just dropped, 300 points almost, 250 points from 11,825. We're trading right now at 11,558. You're off 1.5%. You get the Dow accelerating. Dow had been holding up pretty well. Nothing's getting spared this morning, man. The Dow from 33,700 to 33,200 about, and you get the Russell right now off 26 points. That's 1.4%. Bitcoin not even getting moved, man. What is going on in crypto? Talk a little bit about it. Absolutely remarkable. You have Bitcoin basically flat at 16,200. I've talked about it on the program, folks. Now, this is a 5-minute chart. You put this back on a daily to see the volatility. Okay, there was the volatility on the acceleration of the crypto implosion of FTX. But boy, I was listening to Bloomberg this morning, and I was kind of cracking up because I was saying to myself, who would have thought at a time when you have so many important data points going on with the Federal Reserve, you have the markets right now off 1.5% after we've accelerated higher on CPI numbers, on PPI numbers. There's so much fundamental news and so much news going on in the market. We have Republicans technically claiming control of the House from Democrats. That normally would be something pretty big in the markets that was pretty priced in. But it looks like there's enough votes to make that call and enough races now this morning that Republicans will gain control of the House for some split control in Washington. The market usually loves that. So lots going on. And what is Bloomberg talking about? And I love Bloomberg, okay? And it matters in this market. They're having the conversation of where Bitcoin needs to go for it to implode and how is it holding up so well at a price point of 16,200 when really you started the implosion at almost 19,000 and change. We haven't seen any movement from Bitcoin since Wednesday. There's been a lot of deterioration in that market since Wednesday, folks. When you think about the headlines and the contagion, the Winklevoss twins, the Winklevi, they may be in trouble to the tune of $700 million, man. Nobody has the goods as this thing goes around over and over. I'll pull up that article. My dad was sending me some articles last night. We'll talk about it, man, this morning. But Bitcoin right now down 0.5%. As I come on the air, folks, okay? Now, we'll talk about the Fed because we have to jump to it. But as I was coming on the air, and these are going to keep happening, man, this is the new CEO, the guy that took over, John Ray, who was the guy who took over for Enron and manage their liquidation, okay? He's never seen such a complete failure of corporate controls. Yeah, that is what his saying is in bankruptcy court, declaring that in his 40 years of legal and restructuring experience, he had never seen such a complete failure of corporate controls and such a complete absence of trustworthy financial information as occurred here. He was the CEO of Enron. So be careful, man. He's well aware that when he says something like that people are going to say, hold on, you were the CEO of Enron after they fell apart. He's now the CEO of FTX. And boy, what a mess they have on their hands, man. We'll jump to that a little bit later in the show. But if you got money anywhere, I've been saying it, man, what are you people doing waiting, right? For Gemini, the Winklevoss. We'll talk about them, man. But there's just money tied up everywhere. And it's all commingled somehow, it looks like, man. Yeah, going to be a black mark on the crypto sector for a while. But let's jump to the Fed and Mr. Bullard. Where's my headline? There it is. More hikes needed to get to a restrictive level. And he's talking about a presentation, folks, that shows 5 to 7% restrictive rates. We're at about 3.75 to 4 is the range right now that we are in. Bullard presented charts showing a sufficiently restrictive rate might be between 5 and 7. Market right now is looking for about 5. okay? So that would be like, the market pricing in 5, and basically Bullard's saying that's the best bull case scenario is what the market is pricing in right now, which is that we go to 5. But guess what? The bear scenario is that we go to 7. He did not spell out in his prepared remarks what rate level he favored. The calculation used different versions of the Taylor rule out there, and that compares with the 3.75 to 4% target level of the Fed's benchmark rate, which it reached earlier this month. Boy, you go to 7%, folks. Hold on to your hats, man. And you know what? It's a possibility, folks, okay? Now, he didn't even say whether he's talking about 50 or 75. Maybe they go there at a slower pace, all right? December 13th and 14th meeting, less than a month away. And yes, talking about a downshift in the size of the next rate increase. But folks, if you go 50 on the next one, you're at about 4.5, right? And then maybe you go 50 or 25 on the one after that, you're either at 5 or you're at 4.75. And that would mean that if you got to get to 7, even if you got to get to 6, you got to go 4 straight 25 basis point hikes. Now, if you go 4 straight meetings, that's into the middle of next year. This is just to get to 6 to show you how these hikes could continue, okay? And if you space them out, maybe they go 25, a space 25, you could be hiking well into next year, man, if you have to get to 6.5%. Because they probably will slow the size of the hikes, right, to give it some time for the lag, okay, while not pausing, right? He's very against pausing, the chairman right now. But if you think about it, boy, they have just been on such a hiking cycle of 75, 75, 75, 75. Well, what do? They'll go to 50. Maybe they'll do another, right? If they go to 50, the conversation is going to be at the next meeting. Are they going to go 50 again, or is this their 50, and then they go to 25? In a normal world, folks, just the Fed hiking alone 25 would freak the market out, let alone 75 through the roof. But we got inflation out of control. But that is out there this morning. We got some Fed speak across the board. Higher rates may be coming at you, and we'll see where we go from there, man. But this market, yeah, we got some negative action across the board with the NASDAQ off 170 right now. The Dow off about 335. Let's jump around to some of the FANG stocks as we come into the opening bell. Amazon shares down about $2 with the market. They just trade bonkers, man, like a growth stock. 86 up to 103. You're back to 95. Let's just see on a Fibonacci basis for Amazon what we're coming into here. Right about the 50%. If you're looking for a 618 of the move we had, folks, and boy, pretty remarkable, right? We are right back to where we were, folks, almost coming into Wednesday before CPI data. It's remarkable, the volatility in this market across the board and how it seems to continually get a little bit ahead of itself. We jump over to Apple shares. Apple off about $2.50. Apple just holds up so well, man. They're probably right near the 382 versus Amazon being at the 50%. So Apple just got below their 382, which is at about 146.39, and that is from the move higher that began on Thursday. We jump over to NVIDIA shares. NVIDIA with their numbers last night. Decent numbers for NVIDIA, but boy, you talk about this thing moving on rates. We got a rate scare. NVIDIA is going to trade lower, man. We just traded from 135 up to 170, folks. Yeah, you talk about some volatility, and just like that, you're at 157. We'll jump into their numbers later in the program. Decent numbers for NVIDIA, but they're getting drawn down by the market action this morning. And Kohl's, decent numbers for Kohl's as well, but they pulled their guidance. We'll talk a little bit about them later in the program as well. Kohl's right now down about $1 after paying the price yesterday for Target's numbers. Kohl's. Stay tuned, folks. We'll be coming back talking to our man Kevin Hincks from TD Ameritrade Network. Be right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years years' experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no cash or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We get the S&P futures right now. You're off 48 points. That's 1.2% in the red, trading at 39.20. Let's jump over to our man, Kevin Hincks. Every trading day, folks, 12 noon Eastern time, the TD Ameritrade Network right here on Tiger TV with Fast Market. Your host, Kevin Hincks, Tom White. They break down the day's market action, and let's just jump into it, man, because we got a fast market as usual lately this morning. Kevin Hincks, good morning.
Good morning, Tommy. Yeah, just a bit heavy today as we start the day. Foreign markets down. The Hang Seng and the Nikkei were down overnight. European markets are a little softer out of some news about some tax hikes and spending cuts in the UK. They've got about a $55 billion hole in their economy that they need to fill. So they're doing 30 billion euros in cuts and 25 billion euros in tax hikes. So overall, that and some comments from James Bullard about policy has these markets, at least to start the day, Tommy, a little heavy.
I was going to mention Mr. Bullard, man, his remarks. I was going to ask you, I was reading as it came out, Kevin. I got a chart of the 10-year up on the Thinkorswim platform, some action with some lower price, higher yield this morning. And he had some slides up there, Kevin, I was reading, that talked about a restrictive rate policy between 5 and 7% right now, which market consensus probably somewhere around 5, depending on who you ask. We're at about 3.75 to 4 right now. What do you think? Because I kind of crack up in my head, as in it's pretty interesting if you're a Fed president, right? You go into that and you're sitting there putting together your presentation, Kevin, and you're putting together an illustration of between 5 and 7%. You have to know the market is going to be listening to that. What is your take on that type of presentation from Mr. Bullard and how it might play into where the Fed may go in the future?
Well, two things. Number one, James Bullard has been consistently hawkish the entire time when fighting inflation. He gets street cred, Tommy, because he identified inflation early and said we should have been hawkish earlier. So he's been hawkish. Now, let's get to his comments. He said his comments, somewhere above 5% and perhaps substantially so in terms of his comments. And then we haven't reached a policy rate yet that puts us in a zone that may be considered sufficiently restrictive. So I like consistency in my life, Tommy, and he is consistently hawkish. And so if you're Jerome Powell and you look at the spectrum of your Fed members, you know he's probably going to be the most hawkish. Then it's a consensus among all of them. So, yeah, the market doesn't like his comments this morning, but that doesn't mean we're going to 7% interest rates, Tommy. So it's really but at least now with the foreign markets down and those comments, we're going to be a little heavy to start the day.
And it is pretty interesting, no matter what kind of probability you might assign to it, man, the probability is greater than zero that we end up there, at least, as in we got a lot of data that has to line up because we're almost at 4. It's not outlandish to talk about 5 to 7. The Fed's definitely going to calm things down, but putting things in context here, where inflation is on a year-over-year basis at 8% on some of the numbers, not out of the realm, folks. But when you hear it from a Fed president, it's a little bit of a different story. The market, Kevin, right now, we've given it back about half of the gains that we had from last Thursday. I got it up on the Thinkorswim platform from about 37.62 to 4,050. We're at 39.18. Some decent numbers from some of the companies. NVIDIA, some decent numbers last night, but they're getting drawn down by the market action, of course, off a couple dollars. What are you guys talking about at 12 o'clock coming up today, Kevin?
Yeah, NVIDIA did have some nice revenue numbers. They missed on earnings per share, though. So, today we're going to look at 3 good names coming out with earnings, 2 of them after the bell and 1 tomorrow morning. Like Folio will do a presentation on Foot Locker. That's important because in retail and apparel, that relationship with Nike, that's so important for Foot Locker. Then we'll look at cybersecurity, Palo Alto Networks, and then Applied Materials, Tommy. So 3 earnings plays, looking hard at different segments of the U.S. economy, but a great show coming up.
It is pretty remarkable, man. Some of these equities, you had Walmart crushing it earlier in the week to kick it off somewhat. You had Target, of course, missing in pretty dramatic fashion. We got Kohl's out with their numbers. They had beat, but they removed the guidance. Always interesting when you remove guidance. Kind of a dicey scenario if you're an investor there when you remove guidance, as in they're just keeping it wide open where they go forward. Well, Kevin, we appreciate the time as always, man. Another busy week, and as I always say, always interesting when we talk to you on Thursday. We talk to Kevin, folks, every Tuesday, Wednesday, Thursday, every trading day, Monday through Friday. Fast Market right here on Tiger TV at 12 noon Eastern time. Check it out. But, boy, we talk to you next Tuesday, Kevin. Who knows where this market's going to be by then.
Thanks for having me on, Tommy. Have a great day.
Always a pleasure, folks. Kevin, have a great show, man. Have a great weekend. And, folks, tune in. 12 o'clock Fast Market today. And you heard it. 3 great stocks. And, we'll take a quick look at Foot Locker. And, boy, you talk about some volatility on their earnings even. Check it out, right? We go back to the last time they had their numbers in August. They gap higher. And what do? We come into this earnings right at that same price point. And what about the earnings before that? When you go back a couple, there was the numbers in low volatility in May. But, boy, there was your drop-off in February on their numbers. You talk about dropping from 40 down to a price point the following day of $26 for Foot Locker. And, we're trading at $31. We jump over to the Analyze tab. You jump over to the earnings and the fundamentals, there's some movement for you. Volatility, $3.36 is the volatility priced into Foot Locker, a $31 stock. And you jump over to the simulated trades to look at it. If you're looking for the weekly options, folks, that is a move, right? $3.50 is priced in implied volatility in either direction. And you're talking about only a $31 stock. So what's that? 11-12% move priced into Foot Locker. And, boy, this is going to be an interesting market, folks. And, Kevin, listen, check out the program, folks. They are an advertiser. I know I'm biased, but they do an outstanding job breaking down the market. If you're thinking about options at all, I learned so much watching Fast Market, Kevin Hincks, over the years myself. And, it is interesting when you take a look, right, at some of the movement and Mr. Bullard. But, boy, everything is getting hit this morning, man. You take a look at the NASDAQ. We just traded, folks, from a price point, okay? And this is where you have to examine expectations, because when we came into CPI and you had the NASDAQ trading at 10,800, expectations were low. When you came in at 12,000 and you have a Fed president talking about that potentially, and fair enough, he was talking about it more at about 11,800. But when you have a Fed president talking about 5 to 7%, folks, and year-over-year numbers are still pretty high, to put it lightly, on the inflation front, okay? Do we have to get to 7%? No. But what has to happen then? We have to see more of the type of numbers that we just saw on the CPI, on the PPI, right? We have to see 0.2% month over month. That's a number the Fed likes. We have to see flat numbers. We have to see the core numbers at a very reasonable number going down. You have to see that on a continued basis for the Fed to really feel confident, because, boy, in those meetings, man, and we're just dropping, man. Yeah, because the market, it's remarkable how it just keeps getting ahead of itself, man. Today's going to be an interesting day. Watch out, folks. this might be the reckoning that, you know what, maybe we didn't deserve to go up 10% in a day on one CPI number on the NASDAQ. Meanwhile, just a week later, we have Fed presidents coming out and saying, hey, we're going 5 to 7% is what I think we're doing. Well, the market's pricing in 5% right now. So if the range is 5 to 7 and it's pricing in 5, you better watch out, folks. Because check it out. Even on the NASDAQ 100, and I'm taking the floor of the body, okay? You're talking about a 618. It's 180 points below where we're trading at right now, man. And that's in the NASDAQ 100. And that's just giving back a 618 and the entire move higher. You're still 700 points higher from where we were coming into that CPI number, to put things in context. NASDAQ 100 off 206, S&P's off 54. Come on back, folks. We'll be back for the open.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstad's Tiger Forex Report. Teddy Kegstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
And welcome back, folks. We got markets open, and you open right where we came into the opening bell right now. With the NASDAQ 100 off about 180, S&P's off about 50. Let's see how some of the stocks are moving right now with some of their numbers. You got NVIDIA off about 1.5%. You see the volatility right on their numbers last night. They trade higher up to 164. You trade lower with the market off 177, the NASDAQ right now. We jump over to Kohl's on their numbers, off about 3.2%. Now, Kohl's have been hit pretty hard with Target yesterday. They had decent volatility priced into this equity. I did have an option trade for them. We'll see how it plays out. It was a trying to absorb some premium, and we were looking for a flat to higher, and we opened down about 3%, but we'll see where we go as we're looking for it to stay above maybe 28.50 or so, and we're going to close that out. If you are subscribed to Rocket, folks, look for an update that came out with Kohl's, and we had some action in NVIDIA as well. We'll see how that plays out. And boy, watch out for this market this morning, folks, because that is quite a pullback, and it is a freight train right now. Even though you catch a little bit of a bid, you get the Dow popping a bit on the open. There's your pop on the Dow, but the Dow had really been accelerating, man. The S&P's pop about 5, the NASDAQ still off 1.4%. You come into the opening bell. Crude right now off $1.45. We usually talk to our man Teddy Kekstad on Wednesdays, folks. He had a conference going on Wednesday. Couldn't hit it up to this Wednesday. We'll talk to him next week, though. Gold contract, yeah, you're seeing a reversal of some of the things that have carried this market higher in terms of what are we seeing? Hey, guess what? We're seeing a higher dollar because guess what? We're seeing higher yields because we're seeing the Fed hiking higher than they thought. We're seeing reversals here from what the market had priced in when we just traded pretty higher, folks, on a dramatic fashion. I mean, we're 130 points off of where we were on the PPI number when you back things up, okay? But you could call that an irrational high on the PPI. But even that, the market giving up 50% of the run higher, and that's a 300-point pop. So we're approaching 150 points off of the highs. We got a two-way market across the board right now with the NASDAQ off 163. Okay, and let's jump around to some of the other stories we had pulled up here. And where do we start? So we talked about Bullard, that's for sure. Yeah, and this is talking about more than that in terms of the Fed course being higher. That's the 5 to 7 we talked about. And we saw the 10 years moving in pretty dramatic fashion. Excuse me as I flow through it. I thought it was that article, and I think it's going to be another. Yeah, and that's just talking about the retail sales. I was reading this morning, giving the breakdown. Decent retail sales, man. On a tough week of retail in terms of Target really missing the mark, you had decent retail sales coming into this market. I mean, that was the biggest number in 8 months, folks, that we got. 1.3% versus 1% on the retail sector. But things missing in terms of where they are shopping. That's why Kohl's, it'll be interesting to see where they play today in terms of they're up to 29 right now. Target really took it on the chin, talking about discretionary spending, but guess what? Target took it on the chin, and this is where, folks, Kohl's had priced in $2, $3 almost of negative action on Target's numbers, right? So in the same way that Target priced in positive action on Monday night for Walmart numbers, Kohl's was pricing in so much negative action on Target's numbers, and Target opens down about 1.4% with the market today, even though slightly different action in terms of being where they are positioned in that market. I like Kohl's, man. I do. I was in Kohl's last weekend, man. If you're looking for toys for the kids, they got a great toy section, man. It's some pretty decent prices in there, let alone their products as well. What do they got, 1,100 stores, something like that, Kohl's? And look at that, Kohl's catches a bid, man. You're up by 0.3% at $29.74. And that's with the market being pretty lower, and NVIDIA down about 1.3% right now. All right, what else do we have up here? So this one's an interesting one as the conversation looms, right? So you got all these tech companies laying off people. In the grand scheme of things, they're pretty small numbers in terms of what we're dealing with in the economy and how some of these companies have hired so many. So Amazon's expected to eliminate 10,000 jobs. The total number remains fluid, and they're talking about buyouts potentially is what they're giving. They're looking to trim the headcount through a voluntary buyout program. In exchange for leaving the company, Amazon's going to provide employees with a lump sum severance payment equal to 3 months of pay, plus a week of salary for every 6 months that you're there. So if you're there for a year, you get 2 extra weeks. You're there for 2 years, you get an extra month, etc. They're going to be given a weekly stipend for 12 weeks, and that can be used to offset COBRA premiums. And then their insurance will continue through the end of December. So they're trying to trim 10,000 employees, right? And so it's interesting how the whole conversation goes, right? And maybe I'll even bring it all the way through. Because then it goes to, and I see somebody, a big Democrat, online, right, say, this is why people need unions. Folks, I love unions, okay? And I am a Democrat, even though that doesn't come with everything that comes with being a Democrat, just like being a Republican doesn't come with everything that comes with being a Republican, okay? Because when I see that, and then they say, this is why you need unions, right? Folks, these companies have hired so many people over the last 2 or 3 years, okay, that this is literally nothing in terms of what they are. And let me find where it is. I think I'm going to get it. Here we go, okay? Here's a peek at Amazon's workforce. Look at these numbers, man. This is going from 2009 to 2022, okay? You got to go back to 2015, folks, when Amazon just had 200,000 workers. They're at 1.6 million workers, and they're laying off 10,000 people. It's literally nothing in the scope of Amazon. Now, Meta, it's a little different story. It's a bigger workload, okay? But Amazon numbers, it's literally nothing. And that is some serious job gains, all right? So I joke with friends. And, folks, we do. The middle class, listen, unions, they take a lot of heat, okay, because they've done a lot of there's been situations, as we all know, that things have gone awry because unions demand too much, all right? But that's where it's the corporate responsibility to work with your employees. And, folks, as somebody that has a mom that worked for Verizon that was in a union, the only reason she was able to retire, okay, in her 60s, in the early 60s, is because she was in a union working there for 25 or 30 years. And, you know, the real reason she was able to do it is because they paid her off to leave so that they could hire somebody else that was non-union to make sure they pay them practically nothing compared to what they had to pay her. And that person ain't going to be able to retire in their 60s, folks. It's not going to happen. Okay, so there's the wheel, but don't get it confused with things like this. And that's where the whole discourse of the conversation goes bad, because that's not a real deal, folks. Okay, 10,000 employees going down when the company's got 1.6 million bananas, right? Yeah. Okay. So keep that in mind when you see all this stuff, and they're pretty decent severance packages as well. I think Facebook has a similar deal, talking about 3 or 4 months of severance plus 6 months of insurance, etc. Not bad buyouts for firms like that, to say the least. All right, and jumping around to some of those numbers real quick as we come into this break. And, yeah, be careful of this one, folks. Cole's catching a bid on the open, right? Let's see how it's doing. Look at that pop, man. Catches a bid indeed to 30.68 on the open. But be careful anytime they pull their guidance, man. All right? Yeah, you're catching a bid because this thing just got pummeled from 33 to 29. You just traded down $4 almost on a $32 stock. All right? But going forward, yeah, we had a short-term trade that expires tomorrow, folks. Going forward, they pulled their guidance. Be careful. Cole's up 2.9%. Stay tuned, folks. We'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We have this market holding up relatively well right now. You get the S&Ps down 45, as in holding up relatively well. You could have seen a drop-off on this open, folks. Anytime you see that type of acceleration, this thing couldn't find a bid right now, and we popped 5 points on the S&Ps to 39.24. You got the NASDAQ 100 off 136, and the Dow right now off 244. We jumped to commodities. Crude off about $1.50 at 83.47. Gold contract taking some heat as we have the dollar trading higher this morning. You got gold off $13 right now, and you got notes and bonds with lower price and higher yield, and you're looking at that 10-year, 3.77%, the yield on the 10-year. Pretty remarkable how far we've pulled back when you take a look at the daily, right? We make a low of 108, and even where we were on November 8th, you were at 109.12, but we're pulling back slightly, but still pretty well-defined channel line. You back this out on the 10-year. We jump over to the dollar index right now. Dollar index catching the first bid it's had in a while, man. Bouncing off 106 to 106.93 right now. We jump over to the euro. Euro US dollar right now at 103.36. Pretty similar action. A little bit of a pullback for the first time. We got to jump over to the dollar yen, man. Dollar yen, 140.37. Be interesting to see what happens. If the yen comes back up to this channel line, that'd be about 143 or so, 144 maybe on the yen. We're trading right now at 140.37. But this type of action, we'll see where it goes in terms of the numbers. But yeah, a little bit of a reprieve from the trend recently. And folks, you know what? That was great data on the CPI, all right? And we tie things into the fundamental nature of everything. This is not technical. That was great data on the CPI, but it was 1 month. And we need to see more than that. You probably need to see 3 or 4 months of a consistent declining number on the inflation till we get back down to a level where the Fed is really comfortable. Because the chairman's words became a running joke last time, folks, of transitory. Chairman Powell's aware of that. That can't happen again for his legacy. He cannot have the words that he uses become a running joke when he's proven wrong, as he was with transitory. It's in his best interest to make sure that he is confident, to say the least, that inflation is under control. And boy, I don't know how much data that's going to take, but it's going to take a lot to get to that level in a big way. Yeah, and we jump back to Bitcoin, man. This one's going to be a lesson for the history books, because how is the market getting pummeled? And Bitcoin is flat this morning at 16,200, folks. You jump over to Ethereum. I mean, we're only trading at 1172. Ethereum didn't even make it under 1,000 when all hell broke loose, folks. To put that in context, we didn't even break the lows of June. That does not make sense with everything that's going on right now, man. Okay? If this is the case, if that's the story, then so be it. You know, that there was already so much negative action in there, but there was no way that you had that type of action, folks, priced into the market when you're talking about it. And let me see if I can find the Winklevoss. Yeah, here we go. And this is the article, folks. And these are the other messiahs, you know? I mean, these two, they got a movie about them with Facebook, right? The Winklevi, the Harvard twins. $700 million problem in Genesis. It's just everywhere. And how does this happen? And you know what it all stems with, folks? All of these things stem from all of these crazy interest rates. Thank God I didn't have the ability to somehow get sucked into thinking that And this is where, folks, if you're around enough, for all of the people in the Tigers Den, I hope none of you got sucked in here. But in general, we got a great group of men and women in the den, folks, traders, okay? And we didn't see any of this stuff in there because I think everybody knows, if you know enough to protect yourself, that you can go after yield, man. But you start chasing yield, you know that there's risks associated with it, okay? 8%. Folks, this was 8% when the market was yielding, when your bank account was giving you 0.01%, and they're pushing 8%. Over 3 years, that's 24% they have to pay you on your money, non-compounded. How are they doing it? Yeah. People in the know who understand risk ask themselves that question, and they don't go chasing 8% yield for a crypto exchange based in the Bahamas. It's a bummer deal, man. But Gemini Earn. It lets investors accrue as much as 8% interest by lending out their crypto. It's bonkers. It's Ponzi schemes everywhere built on guaranteed interest rates that are unattainable. How is this happening? Right? No wonder Gensler's catching so much crap at the SEC, and he should be, because you got hundreds of millions, if not billions, everywhere. People saying that they're guaranteed interest rates on earning them. And the problem is that they tie it together, right? Yeah, and this is a great, it looks and feels very much like a high yield savings account. And I'd go even further on the next one, but with far fewer safeguards if things go wrong. Yeah, but it really couldn't be further from the case. Yeah, far fewer safeguards. How about no safeguards whatsoever? And he's running a gambling house. And the new one is, SBF's got his comments out there, I guess, this morning. He was just back and forthing, texting, whatever, private messaging with some reporter out there. And his claim right now is that client funds weren't traded. Well, what happened is they were loaned out and then they were traded. Right? So all they did is they made a loan that was collateralized. That's going to be the message. Well, they made a loan to themselves and got back nothing in return and then traded that money for themselves. It's a technicality, and hopefully he goes to jail, folks. That's all I got to say, because you're smart enough to know that you're doing no wrong. And I don't understand why Ethereum is flat today and Bitcoin's flat today. Folks, if you have any clue in terms of how that market, because I would love to know how Bitcoin's still hanging out at 16,000 right now. Yeah, it's one possibility, right, is that if you have money in crypto, where do you want to be? Well, the strongest one's probably Bitcoin, man. Second strongest, maybe Ethereum. So that could be holding up those. But yeah, the dominoes could just be beginning, folks. Because you're seeing some of the biggest stars out there losing hundreds of millions of dollars. And every time it happens, they say they're all right, and then 2 days later, they file for bankruptcy across the board. So hopefully you're learning a lot from this without having to pay the ultimate price of the cash invested, because no matter how often it takes, folks, okay, history repeats itself, man. And yeah, and we're seeing it play out in pretty dramatic fashion right now with Bitcoin holding up pretty well. And listen, this could just be the beginning, folks. All right, you back it up on a 3-year weekly. In the year 2020, Bitcoin was at 4,000. What's it doing at 16 right now? Think about how things have gone over that time. All you did was you got a tulip bubble, man, up to 70,000 before the exchanges turns out to be Ponzi schemes in the year 2022. I keep harping on it because I know there's people out there that still have money in there. There's no problem with thinking it might have a future, folks, but take your money out, put it in an FDIC-insured bank account or a brokerage account with Thinkorswim, TD Ameritrade, and let things sort themselves out, because there's much more risk to the downside right now than there is to the upside. You're not going to see Bitcoin run to 30,000 right now, in my opinion. They're all opinions. Nobody knows, right, folks? But boy, they got a lot of capitulating to do for Bitcoin. Yeah, because how do you get an industry to accelerate like it has? I wouldn't touch Binance. There's no way I would touch Binance, folks. I wouldn't touch anything. The way that you trade crypto is figure it out. Go watch some YouTube videos. We'll have to do, maybe I'll do a show at TFNN, man. I'll bring on some guests, right? Hard wallets. Don't trust anybody. The whole decentralized thing, you're hearing a lot about it. That was a great idea. And somehow the shysters figured out a way to centralize everything and ask for all your deposits and then take that money and gamble on the side. So if you're going to trade crypto, man, put it in a hard wallet. Make sure you control it. Don't trust anybody. It's a little bit more difficult, but much less risk. Still risk, but much less so. S&P's down by 41, 39.27. Markets catching a little bit on the open. NASDAQ 100 now off 9/10. We'll be right back, folks.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got the market still in lower territory, catches a little bit of a bid. NVIDIA on their earnings, basically flat, man. You're just up $1 right now, up 0.6%. You're going to see some volatility today, folks. NASDAQ 100 off 1.1%. You get the Dow right now off about 0.8%. We jump over to Macy's with their numbers this morning, up 9.99%. There you go for Macy's numbers. And we jump over, whoops, where are we? There we are. We jump over to Macy's numbers. Raises the earnings forecast, says it has fresh inventory for the holidays, reported third quarter revenue and earnings that topped the forecast, and they stood by their revenue guidance as it faces a tougher sale backdrop this holiday season. Now, you put that in line with Kohl's, for instance, right? And Kohl's drops their guidance anytime they drop their guidance, folks. And as I said, we had a flat to bullish trade. What we did wasn't Kohl's. So we had sold a $28.50 to $26 put spread, folks, expiring on Friday. Okay? If you'd like to try out my newsletter, head on over to the front page of TFNN. Now, this one's making money right now. The NVIDIA position was bearish, and that's losing money right now, but we'll see where that plays out. But we did close out this Kohl's position on the open, and the trade was a $28.50 to $26 put spread that we sold for a credit. Okay, so the idea is that we did not want Kohl's to trade into the $28.50 to $26 range. by the close tomorrow. And the thinking, okay, as you go along with it with the trade, is that we had a lot of volatility priced into this equity for options, and it already traded lower dramatically. Well, guess what? They came out not too spectacular. They pulled their guidance. You're still down $2.50 from where we were trading at just 2 days ago. But nonetheless, you see the action. You absorb the premium to the downside. Doesn't work every time, folks. Not working on the video right now. That position's still open till tomorrow. But try it out if you'd like from my newsletter, folks. But you see the type of action. So not always the case in terms of where you need to go, because expectations were already priced into this equity coming into their earnings when it traded from $32.80 down to $29.50 yesterday on targets numbers. Macy's, though, check it out, man. Up 10.3%. Stay tuned, folks. It should be an interesting one. We got our man Basil Chapman coming up next. Steve Rhodes. No, yes, at 11 o'clock. Fast Market at 12. They're talking Foot Locker with a couple other stocks. Larry Pesavento, Dave White, Tom O'Brien this afternoon. See you tomorrow morning, folks. Stay tuned for Basil. Have a great Thursday.